Welcome to another 27 minutes of the only weekend business program, Capital Market, right here on Channels Television. And it's the first edition for the month of June. I'm Ladi Williams. As usual, let's get the performance for major bourses that we track around the world. And we see they ended the trading session of month of May mostly in the green as traders, digested the latest Eurozone inflation, which rose by 2.6% in May, and its implications for next week's European central bank rate decision. At the same time, traders also, assessed some economic reports from Asia within the week. On Wall Street, the Dow Jones Industrial Average closed Friday up by 1.51%. At the same time, the Nasdaq Composite slipped marginally by 0.01%, while the S&P 500 closed the day higher by 0.80%. In Europe, the indexes closed all in the green. The UK's FTSE 100 index was up by 0.54%, while Germany's DAX gained 0.01%, and France's CAC index closed the day higher by 0.18%. For Asia Pacific region, China's Shanghai Composite that fell by 0.16%, while Japan's Nikkei 225 that added 1.14%, and the Hang Seng index closed down 0.83%. And here in Nigeria, the NASD OTC securities market's performance ended the last trading week of May positive, as the index rose by 16.58% week to date, while investors gained about 30 billion naira. At the same time, the volume of securities traded this week fell by 68% to 4.23 million units, but the total value of transactions for the week soared by over 184% to close at 2.63 billion naira. While the number of deals carried out, that was higher by 36.89% week on week. Top three advances for the week are Aridol Holdings, Afriland Properties, and Friesland Campina, while the trio of Acorn Holdings, UBN Properties, Central Securities Clearance System were the top decliners for the week. We see the domestic stock market closed the last trading week of May on a positive note, also up by 1.73% after gaining in all week's trading session as the month of May came to an end. That was on Friday. Despite a 3 consecutive weeks of losses, the perfect gains recorded this week pushed the overall performance for May into the green zone with a 1.09% month-to-date gain recorded on the market. This was largely driven by bargain hunting activities of investors for shares across the banking, oil and gas, consumer goods, as well as the insurance sectors of the NGX, while profit-taking ensued on the industrial goods counter. Fidelity Bank tops a list of 45 gainers with more than 22% increase on its share price, while CNI Leasing led 24 other losers with an over 1% decline on its share price. The trio of Abe Mortgage Bank, Axis Holding Company, and Zenith Bank were the top 3 contributors to a total volume of 2.18 million shares traded for 31.3 billion naira this week. And as I said before, it's a brand new month. And looking at the month of May, investors did manage to end the week on a high note. But let's discuss some issues in the market now and also gauge Nigeria's capital market under President Tinubu. Joining us for this conversation is Mr. Olatunde Amolegbe, MD, Arthur Stevens Asset Management. Joining me via Zoom. Great to have you on the show. Happy Saturday.
Thank you, Olade. Thanks for having me. Happy Saturday to you too.
Fantastic. So everyone's trying to gauge everything under President Tinubu at this time. Let's look at the capital market. In your view, how's the capital market performed in 1 year of President Bola Tinubu?
Well, I saw different data points trying to gauge the economic performance of President Tinubu. And I noticed out of all the macroeconomic indices that were measured, it will appear to me that it's only the stock market that has ended up positive in the 1 year of the administration. I think I saw something close to 85% gain in the stock market since President Tinubu came to power. And one has to look at these data points, and I've gotten asked, how come it is only the stock market that has done well while all other macroeconomic indices are pointing southwards? And I've said over and over again that the stock market is a future pricing mechanism. It's not only pricing what we see on ground, unlike other indices. It's not only pricing the present, but it's also pricing what the market expects in the future. And that is the reason why it will appear as if, that's the reason why it's called the barometer of the economy in the first place. And that is why the stock market seems to be pointing in a different direction than virtually all the other macroeconomic indices you could see under this government at the moment.
But do you think investor confidence in Nigeria is, somehow, improving, coming into the capital market? We've been talking about, foreign participation. The narrative before now was the foreigners are not really, in this market at this time, the equities market. But we've seen, what's been done with interest rates so far. So how would you describe, investor confidence, foreign investor and local investor confidence in the market?
We're already seeing the green shoot of foreign investors coming in and testing the waters. That we've not seen for a couple of years. I think they will probably started testing the water because they see that it will appear that some of the tough decisions we need to take to put our physical house in order has been taken. The removal of energy subsidies, the attempts to liberalize the FX market. Honestly, the sort of measures we needed to take in order to put our physical house in order, and also give these foreign investors confidence that if they do come into this economy, they can invest with confidence, knowing fully well that when they ultimately seek to exit, they can get their money back. And that is why we're seeing them coming in, in trickles. I think the last data I saw showed that foreign portfolio investors, portfolio participation in the NGX increased by close to 100%, on a year-on-year basis. So I think more of that will happen. The fact that interest rates is up, and the fact that equity prices are also very cheap would also be secondary reasons why these guys are coming in now. But the fact that, on a macro level, they think that we've done what we need to do to put to strengthen the finances of the larger economy itself might be the reasons why they are coming in now. And don't forget that, with time, we are going to see index keepers or risk analysts such as the MSCI index, such as Fitch, that have either reclassified Nigeria or even removed Nigeria from their basket totally, start to reconsider their positions. And by the time, they release their ratings or they put Nigeria back in their basket, in their ratings basket, that will also increase the confidence of these foreign investors, and we're going to see more of them continue to come into the country. That in itself is a show of confidence in the economy. Maybe not what we're seeing on the ground right now, but in the future.
All right, but looking at the FX market, we've seen a lot of movement there, a lot of intervention from the Central Bank of Nigeria this time. But looking at where we are, right now in the official window, do you think we'll still see, foreign investors, moving into this market, going forward?
I think what they want to see is a foreign exchange market that has stability, a foreign exchange market that has very limited intervention by government, if you will, and a foreign exchange market that ensures that they get actual value for the currency they are bringing in. I think we have moved in that direction. We now have a situation where foreign exchange is not being allocated at the CBN level, but as an investor, you can bring in your currency and exchange it, at market rate. Those are the sort of measures that these investors wants to see. And I think that in as much as we maintain that and we continue to try and strengthen that, more of them will continue to, look in the direction of the Nigerian market. The fact that the CBN is intervening, every now and then is just natural. It's typical of what CBNs or central, Federal Reserve banks all over the world do. They tend to intervene when they see imbalances in liquidity in the FX market. So it's really not unusual, So it's what is expected of the CBN.
Right, and we did see that play out in the Japanese FX market just last month. But, with the rate hikes we've seen so far in Nigeria in 2024, I guess we're at about 750 basis points, at this time. Would you say the fixed income market is still the market to go to right now?
Well, for a typical investor, in as much as the CBN continues to tighten, the reason for the tightening is a different matter entirely. But for a typical investor that is seeking alpha, you will want to look at the fixed income market, in as much as rates continue to move in a direction that gives you a return that is at least close to inflation rate, or at least moving in that direction. Because the truth of the matter is that, in as much as the relationship between the equities and the fixed income market is inverse, if we see interest rate continues to move up, it is very likely that equities market will most likely continue to recede. So investors will possibly continue to move into that fixed income space until the point where we start seeing a reversal in the tightening stance of the CBN.
And talking about the tightening stance, of the CBN at this time, do you see a hold, coming next? Do you think the CBN have reached their limit, when it comes to rate hikes?
Unfortunately,
or getting
not
close?
Yet. We're probably getting close, and the indicators are there that we're getting close. Because the fact is that if you look at where the MPR is at this moment, 26% or thereabout, and compare it to where the fixed income market is trading, the 1 year instrument, the 1 year treasury bill is probably trading in markets at something like 20% now, which means that the market is sort of even resisting moving close to where the MPR is. So we're probably getting to that point where continuing to tighten might not necessarily be giving the CBN the sort of result or the sort of impact it's expecting, simply because the market is resisting further increase in rates.
And I remember, in the U.S., when the U.S. Fed, kept on, hiking rates right there in the U.S., the fear was that they will break something, in the economy. So at some point, they had to, start holding. But looking at the Nigerian economy, do you think the MPC has broken anything in the economy with the rates hike so far?
I think that some things have been affected. And we can see it, because what is now happening is that, because of the continuous rate hikes, manufacturers and business people are continually repricing those changes in rates, because after all, they need to borrow to do their business, and the borrowing rate is pegged more often than not to the MPR. So if you continue to raise and if you continue to tighten, you might not necessarily get the sort of result. Your expectation is to have the increase in rates reduce liquidity within the system and possibly help to stabilize the fixed income market. But if, on the other hand, the increase in rates is now also leading to elevated lending rates to manufacturers and producers, then you have a catch-22, where you might not necessarily be getting you might not be seeing the exchange rate instability you used to see. But on the other hand, the finance cost for producers and manufacturers is increasing, thereby increasing inflation further. So it's really a catch-22. So I mean, the CBN will really need to calibrate their decisions very carefully to be sure that you are not taking from one hand and then losing it on the other hand.
Right, we've definitely seen the manufacturers, cry for help, about the current rate hikes, definitely. But we'll continue the conversation right after this break. There's so much to unpack right here with the latest exit there, talking about foreign companies leaving or planning to leave the country at this time. We'll continue the conversation right after this break. Do stay with us. Welcome back. Well, first, let's look at the oil and gas industry. Now, we're seeing conversations about the future of Nigeria's oil and gas industry are brewing right now as, divestments from IOCs and takeovers by indigenous oil players continue. We'll see the Harvard Business School Association of Nigeria highlighted these issues in a recent meeting of stakeholders in the industry. Take a listen.
Oil industry has a significant impact on Nigeria. It's part of our history. It will continue being part of our history. It drives a lot of things. Whether when the forest goes up or down, oil industry is involved. If there are fuel queues, if there are diesel queues. So oil affects our lives in more ways than one.
Schlumberger used to train all of us, both Schlumberger staff and staff of the operating companies. We were able to set up with these companies we set up because Shell trained them and we took people from Shell to come and set up. Now all of those people we used to start up the businesses are the ones they are calling dinosaurs. And the people who were trained in Schlumberger and Shell stopped training 15 years ago. That's why the middle is empty. We have to take the pattern from there. Because all of us now know, once all the people we brought in to set up these businesses 12, 13 years ago are hitting 60 and retiring, we have to worry about the pipeline, the human resource pipeline. And you can only really invest in it when your business depends on it. So it won't be an all-comers affair. The few who are doing well among the IPPG companies, who now know that the future of their business depends on it, they will invest on it and they will solve the problem. They will have to.
There was stakeholders at the oil and gas industry meeting earlier this week. But let's continue the conversation. I still have with me Mr. Olatunde Amulegbe, is the MD Arthur Stevens Asset Management. Thank you for staying on, sir.
Thank you.
We're still gauging the capital market under President Tinubu 1 year. Let's look at trading, though, in the month of May. Was it the sell in May and go away slogan that dominated?
Say that again, Dad, if you don't mind.
No, I'm saying let's look at the month of May trading on the stock market. So I'm wondering if the sell in May and go away slogan dominated as usual this time.
Okay, but the market closed positive for the end of May.
Right.
So which means that we are just seeing your regular trading, people taking advantage when prices are low, and selling when they feel that they have made some money, and then coming back in. And lots of other dynamics are at play here. We've mentioned the fact that the foreign investors are coming in gradually. The hope is that those guys aren't coming in and leaving within a month, and will hold their positions for a longer tenure than expected. And the expectation is that on a general basis, the market is cheap at this point. So I do not see a situation where we're going to see a precipitous fall. Rather, we're probably going to see some level of stability creeping in, and then when the situation changes regarding what's happening with interest rates and fixed income and all of that, then maybe we'll start seeing an upward trajectory. But I think we're close to the point where I see more of a stability rather than any precipitous fall in equity prices at this point.
Right. So I guess you're expecting stability for the month of June.
Absolutely. That's my prognosis.
Okay, well, we'll keep tracking that definitely. But earlier this week we got that breaking news. Kimberly-Clark announced it will soon shut down its Ikorodu production facility, and this is despite $100 million investment they made, just 2 years ago. How are you seeing this latest planned exit?
Well, unfortunately, the exits of this multinational manufacturing company seems to be the story of our economic life of recent. And, the reasons are not really far-fetched. And most of them actually hint at those reasons, in their exit announcements. And there are really two obvious reasons. The first one is elevated production costs. And secondly, low purchasing power. And when you have the combination of those two factors, manufacturing companies, particularly consumer good company, will struggle to survive. I mean, Kimberly-Clark has said, they were spending an inordinate amount of money on power generation and other costs. While they had to reduce their their production days from 7 to about 5, simply because they were producing and they weren't selling enough. And the reason why they weren't selling enough is simply because the consumers just simply don't have the purchasing power to buy. This is the same reason that runs across virtually all the other multinationals that have exited recently. Now, for international companies, that situation even escalates even further, because not only are they having to contend with the fact that they need to be profitable, they need to be profitable in dollars, and we know what has happened with exchange rates and all of that. So even if they turn a profit in naira, converting those nairas to dollars could also mean that they are ultimately running at a huge loss. And I will assume that that's the reason why most of them are leaving. Some have said it is in their interest to produce somewhere and import into Nigeria and sell, such as P&G and Unilever and some of them. While Kimberly-Clark have not said what exactly they intend to do. But really, those are the two main reasons why we're seeing this international consumer goods company exiting. And it is not really good for the economy on the short run. It's not good because, we're talking of the exits leading to unemployment, loss of investments, loss of confidence, on the part of some other internationals that might be considering coming to invest in Nigeria here, because, if they see companies that have operated here for 40, 30 years, deciding to shut down shop and exit, they will think twice before they come in themselves. So,
Right.
It's really important that we find a way of stopping the bleeding.
Right. And talking about the bleeding, at this time, see what's happening with international, manufacturers at this time. What's your outlook, for, FMCG companies that are listed on the stock market right now? That's indigenous, manufacturers.
Okay, so the truth is that is a double-edged sword. For the indigenous manufacturing companies that have gone far regarding backward integration, i.e., a significant portion of their raw materials and production materials is sourced locally, then the exit of some of these internationals actually provides them an opportunity to gain market share. All right, for those that still have significant exposures to foreign content and still have to depend on foreign content to produce, they will have to think or contemplate how they are going to have to do substitution for those products that they have to bring from abroad. Otherwise, it's going to be very challenging for them to be able to break even and be profitable.
All right, definitely. We hope for better days ahead for the economy, and some other investors see opportunities going forward. Thank you so much. It was great having your perspective, Mr. Olatunde Amolegbe, MD after Stevens Asset Management. Thank you so much.
Thank you, Ladi. Thanks for having me.
Right, so that's the show today, and definitely we're expecting a lot, next week in most of these markets, the T-bills market, fixed income, and the equities market. But do remember, at the end of the day, we're all trying to make a profit, in this market. So remember, if you're going to sell in this market, find the top. That's it for today. Thanks so much for watching. I'm Ladi Williams. Bye for now.